Blog Talk Radio.
Good morning from sunny Orange, California, Orange County, California. Thank you. I'm Brian Dooley, your host for Tax Talk. I am a CPA with a master's in taxation. And as many of my longtime listeners know, I love the virtual world. And my assistant is Robert the Robot, a virtual assistant. And Rob, how are you this morning?
Brian, I am feeling fine. Thank you.
Great, because you're going to be a big part of this show. Today's topic is creating your private tax law, a tax law that is designed by you, placed into the IRS regulations. And Rob's going to kind of explain to us just how laws are written and the importance of an IRS regulation. If you could find your notes, Rob.
Well, Brian, we all know that our Congress does nothing, and it does nothing very well. When it comes to tax law, Congress gives the IRS an outline and orders them to write a few hundred pages of regulations for each law. These regulations become the real law. To be valid, the IRS must have public hearings for each regulation. Brian, you have been active in influencing the IRS to draft these laws. I remember that in the early 1980s, you attended your first IRS hearing. They did exactly what you asked. 10 hearings later, and they continue to respect your ideas.
And all of you can achieve the same goal. It's in part the way you draft your comments and the way you plead your business needs, which we'll get to at the end of this episode. The magic is the boss of the IRS. The boss of the IRS is the Department of Treasury. They know that small business creates 70% of all jobs, and the IRS has been told to help small business owners and their advisors. Now, keep in mind, the Department of Treasury's secretary is a cabinet member. The IRS and the Department of Treasury is part of the executive branch. That's the branch run by the president. And presidents are kind of required by their party to keep the economy going so that the party and they can be reelected. So that's the magic. That's the pressure. So we hear how the IRS attacks small business. Well, at the top level in the national office, Washington, D.C., it's a whole different mindset. And they've been told to get the business booming, more so now than ever before. So our listeners can get their own loophole placed into the laws merely by submitting what's called a written comment to the IRS on a regulation. And the way it works is this. The IRS gets the law from Congress. A few months later, they meet the attorneys of the IRS, and these regulations are all written by highly trained, brilliant IRS attorneys that work in the national office closely with the Department of Treasury attorneys. And they put together a regulation that they believe follows the intent of Congress, and that's going to be efficient for the economy. And in the outline given by Congress, there's a lot of unknown items. So the IRS fills in those blanks. And a law that's one page long can easily have 20 or 30 pages of regulations. Law that's 3 pages long could be up to 100 pages of regulations. So think about this. The more complex something is, the more likely it's not going to work. And when a law doesn't work, that is your loophole. So in working with the IRS on drafting these regulations, you and your tax team look at the theme what the IRS has issued as a proposed regulation. So the first step, the IRS will send out the regulations in proposed form, and they will ask for these written comments. I'm going to give you the website where you can find these proposed regulations. There's 300 regulations now that IRS feels that are important. Many of them are going to have tax advantages to you. Now, a few days ago, the government created a great website to allow comments to be submitted via email and to also search what is going on in the IRS regulations. So you could quickly find your topic by putting in the keywords, or you can look through a list. This website allows you to put your comments in writing, and then if you wish, you can ask for a public hearing. Sometimes the IRS has a public hearing. They try to avoid it because it's a lot of work. And when there's a public hearing, the Department of Treasury gets actively involved, and we'll talk about that more. Now, I'll place the link on our blog post on my blog and on the show notes for this page so that you can find both of these websites, the one that has the place to do the comments, and in the second we'll talk about the one that has the IRS to-do list. But there's a lot more to this. Your tax planners must know the future. The future is the trends in the tax law. Planning for the existing law has really low value because these laws change so fast. The life of the average tax law is less than 2 years. So you want to really be on top of your game. Planning for the past means your tax team's looking at deductions, and that's not the best way. Deductions is just kind of fringy tax planning. It doesn't really give you wealth. Now, to know the IRS priorities, they have created a page on their website to let you know what's going on. And the IRS just has too many laws to write. So they have asked the public and CPAs and attorneys to look over the list and give comment as to what you feel is the most important and how you want these laws to work with the business environment. Amazingly, the IRS has 300 hot topics. That is how much they have going on. One or more of these topics will impact your business and your taxes. So, work with the tax team. Not only do you help the country, but you'll get the tax laws that you need. Now, Rob, can you read the IRS announcements on this plea to help to get help from us taxpayers?
Yes. A few months ago, the IRS issued the following statement. We are pleased to announce the release of the 2012 to 2013 Priority Guidance Plan. In Notice 2012-25, we solicited suggestions from all interested parties, including taxpayers, tax practitioners, and industry groups. We recognize the importance of public input to formulate a priority guidance plan that focuses resources on guidance items that are most important to taxpayers and tax administration. The 2012 to 2013 Priority Guidance Plan contains 317 projects that are priorities for allocation of the resources of our offices during the 12-month period from July 2012 through June 2013, the plan year. Projects on the 2012 to 2013 plan will provide guidance on a variety of issues important to individuals and businesses, including international taxation, health care, and implementation of legislative changes. The published guidance process can be fully successful only if we have the benefit of the insight and experience of taxpayers and practitioners who must apply the rules. Therefore, we invite the public to continue to provide us with their comments and suggestions as we write guidance throughout the plan year.
Great, Rob. Now, there's two advantages of having your tax team get involved, and you want them to get involved even though it's going to cost you some money. To save taxes, the best thing to do is to spend some money and create your own tax system. Now, the first advantage is by getting involved with this, reading over these 317 projects, you'll know what issues worry the IRS. You'll know the trends in the tax law, maybe even know what items they would like to audit on your return. Second, you're able to design the regulations to allow you to save taxes. Now, besides written comments, I have enjoyed going to Washington to meet with IRS attorneys and Department of Treasury attorneys on public hearings. So I've always requested a public hearing. And what I find interesting is the Department of Treasury does not let the IRS conduct these hearings alone. Remember, the Department of Treasury is part of the President's cabinet. It's all about jobs, and more jobs, and getting the president reelected or his party to stay in power. So the IRS, if the IRS starts asking me questions that indicate they're not helping small business, I'm amazed. The Treasury officials step in real fast, and they kind of shame that IRS attorney who's going astray. Because some of these attorneys have not worked in business, and some have, but some have not. Well, can you read a few of the IRS tax so our listeners can have an idea of what's going on?
Okay. Here are some of the topics. Guidance under Section 25 on credits for residential energy efficient property. Final rules on the new markets tax credit as well as other issues. Final regulations under Section 108 concerning the bankruptcy and insolvency rules in disregarded entities such as LLC and asset protection trusts and S corporations. Brian, this topic is full of possible loopholes. Final regulations on the deductibility of expenses for lodging not incurred in traveling away from home. Guidance under Section 163 regarding the mortgage interest limitations. Notice under Section 170 regarding charitable contributions to disregarded entities. This rule is full of loopholes. Regulations under Section 174 concerning inventory property. Regulations under Section 199 including amendments by the Tax Extenders and Alternative Minimum Relief Act of 2008. Regulations under Section 199 relating to computer software. Regulations on delay rentals under Section 263A and 612. Final regulations under Section 274 regarding the entertainment use of company aircraft. Regulations under Section 274 regarding reimbursement and other expense allowance arrangements, including employee leasing arrangements. Regulations under Section 280 regarding deductions for expenses attributable to the business use of homes and rental of vacation homes. Brian, I know this one is your favorite. Regulations under Section 1012 regarding basis rules for stock and debt. Well, the list goes on and on. If you want the complete list, then call Brian at 714-710-9199.
Thanks, Rob. And I enjoy you pointing out loopholes. And there are so many loopholes in not just the ones that you named, because it's a total of 317, but in almost all of them. And yes, Rob, you're right. The tax basis rule for debt is the cornerstone for what's known as private money. And the next Blog Talk Radio will be talking about printing your private money to save taxes. My other favorite topic, which Rob didn't read, is family private trust companies. It's also on the list. This got postponed for about 4 or 5 years when the Great Recession started. Nevada private trust companies can be used for asset protection, to reduce multi-state taxation, and, of course, estate taxes. The IRS really wants to help on this topic, and it's one that's worth exploring. I have some items on this on my blog talk, and I have a video, and if you just Google my name and private trust companies, you'll find a lot of good information. And I will surely be involved with this. Rob, when you post these these topics to our show notes and on our blog? Rob, where are you? Okay, Rob?
Yes. I will put the link on the blog talk page for this episode.
Okay, thanks. I hate to interrupt you on your break. And can you also please add the template I have on how to write a comments for a IRS regulation? Can you find the one that was my last congressional hearing on international taxation? I'm sure you'll find it someplace.
Yes. Brian, I will find it.
Great. So there's really one more important way that's the high end of getting your private tax law. So what we first talked about doesn't cost you anything. And the Department of Treasury really is influenced by small business. And when I go to a hearing and there's people from AT&T next to me speaking, I am so delighted and kind of thrilled and honored by how much more attention I get when I represent myself in the plight of small business versus the big companies. So attending the hearing is really good. Like I said, all this is free. But what's not free is actually buying your congressman. And we still do this in this country. You hear about lobbyists. You're probably not surprised that lobbyists also influence tax law, influence tax policies. But sometimes a firm wants their own private tax law. And they don't want to be caught doing this. It's very embarrassing to have your name in the tax code. Actually, you can't do this, and the laws cannot favor one person, at least not outright with a name. So the way it works is that companies, small by that I mean privately owned and publicly traded companies, buy up the congressman. And there's a lot of ways of doing it, even though the law has been reformed. A speaker fee, advance royalty on a book. Now, of course, corporations can give to PACs, and a PAC may be a PAC that's going to support one or more important candidates, those that are on the tax committees. And this is these changes in the laws are put in the fine print of the law. And one that, and there's so many examples. You'll see, if you read through the law, your tax advisors, when you get to the bottom of the tax law, you'll see the fine print, and they will have exclusions for certain companies. And the way the company is designated as the only one who gets this fantastic break is that the law will say this law applies to any corporation formed on, I'll make up some date, December 10th, 1995, whose address is 123 Main Street, Chicago, Illinois. And actually, I don't give the address, but I'll say whose office is on Main Street in Chicago. And there's other examples. But, Rob, can you go through the one that I thought is the most blatant? This is an auto manufacturer back in 1985, 1985, 1986, when Reagan was clearing up the tax code for loopholes for big business. The at-risk rules have been around for a long time, and they basically say if you're not economically at risk, you don't get a tax break, maybe depreciation or tax credits. And so it's designed to, let's say, to prevent somebody from buying an asset with non-recourse debt and getting big tax breaks. Now, here's Rob, if you could find this and kind of...
Brian, this is amazing. A taxpayer bought $70 million of tax credits. $1 of tax credit equals $1 of money. This is what happened. Congress eliminated the tax credit where assets were purchased with non-recourse debt. In 1986, Congress enacted the at-risk rules for tax credits. Section 49 eliminated tax credits when the taxpayer is not at risk. For example, buying property with a non-recourse debt is not at risk. Here the taxpayer, an automobile manufacturer, bought its way out of the at-risk rule. Section 49 provides that property purchase which was approved by an automobile manufacturer board of directors on January 7, 1985 is not subject to the at-risk rules. This private law had a cap of $70 million. Brian, I guess the automaker could only afford to buy off the congressman up to $70 million. Oh, note that this private law only applied to an automobile company. No other business could use this law. Also, the board of directors had to have met on the 7th of January 1985.
Wow, that's fantastic. So let's just kind of look at this closely. The law gets passed in 1986. Obviously, these people are working with a congressman way before it gets passed. And at that time, there were three big automakers. And so one of the automakers saw this law, saw the law coming or wanting to do something. And so the way it's designed, if you're the other two automakers, unless your board met at that time, of course, when you're a publicly traded company, those board meetings cannot be backdated. You don't get the law. So one of the three automakers got a tax break that the other two didn't get. And my experience in observing people who've undertaken this is that for every $1 they spend on buying off their congressmen and senators, they get between 10 and 20 times back in tax breaks. My last experience was observing a person buying off the laws for a change in international taxation. They spent $250,000 for that. My guess, since that was 25 years ago, the cost would be more like $1 million. So, as for a firm that wants to save $50 million or $70 million in taxes, there's always a risk, of course, that something will go wrong and your congressman won't be able to get this in. But it's part of business in America. Even though it's not something that I'm a fan of, I really am a fan of getting involved with the process of regulations. But just to keep my listeners up to speed, up to date with what's going on with opportunities. If you have any questions, of course, give me a call. I'm Brian Dooley. You can call me at 714-710-9199. I wish you great tax planning. Our next episode is printing private money to save taxes, and that one will be a little technical, but it's going to be great.